Do you believe that investing in Tesla stock is best done right now? Some people think that now, even if Tesla's valuation is cheap, is the ideal time to purchase stock. In fact, the majority think that investors ought to seize the opportunity presented by Tesla's stock's low price before it rises once more. This is one that you most definitely don't want to miss. Experts assert that defying conventional opinion is more advantageous the longer one's outlook. Having said that, it still makes sense to invest in the top EV firm right now. Even if it seems like the worst time to buy Tesla stock, the price recently hit its lowest level in 2 years and is clearly falling sharply. Tesla's price is still less than $200. Investors are reluctant to purchase Tesla shares as a result. Considering that Tesla's price has dropped 52% from its peak, investors might be thinking about including Tesla stock in their portfolio. Get an additional $10, register, and fund your account with any amount on Moomoo. This exclusive bonus is being offered in honor of Moomoo's 10th anniversary. Take a look at the following link. Moomoo is an excellent stock trading platform with a plethora of innovative, user-friendly capabilities. Many of you will likely find it extremely beneficial, particularly if you wish to take a more active role in your finances. Determine the best timing to buy and sell stocks, for instance. In the description below, there is a link. Tesla shares have dropped more than 40% in value this year, and about a third of that value has been lost in the last 3 months. Many investors may be considering whether now is a good time to purchase the shares of the electric car manufacturer in light of the firm's decline. After all, the core business is expanding quickly even while the shares are declining. There is no denying that there is a great deal of macroeconomic uncertainty in the world today, but Tesla's most recent financial results don't seem to reflect that. Revenue for the third quarter rose 56% over the previous year, and the period's free cash flow surged 148% to almost $3.3 billion. The company's cash position increased to $21.1 billion as well. The robust quarter was driven by a surge in Tesla's auto deliveries. As a matter of fact, third quarter deliveries as a whole rose 42% annually to 343,830. Last month, Tesla released its Q3 profits, which came in 10% ahead of forecasts at $1.05 per share. Despite the negative impact on the company's earnings, the stock fell. The top line grew at a dismal rate, with sales on $21.45 billion and revenue 4% behind estimates, even with record 343,830. Deliveries made during the quarter, this fell short of projections by a small margin. With a year-to-date decline of almost 46%, Tesla stock has outperformed the S&P 500's minus 22%. Even after 3 years, Tesla shares have risen 721%, outpacing both the benchmark and its peer groups by 7%. Tesla anticipates a 50% increase in output for the entire year over 2021. During the firm's third quarter earnings call, Zachary Kirkhorn, chief financial officer at Tesla, stated that the business expects delivery growth to be somewhat less than 50%. During the conference call, Elon Musk, the CEO of Tesla, hinted that car orders were still high for the fourth quarter. I can't emphasize enough we have excellent demand for Q4, and we expect to sell every car that we make for as far in the future as we can see, Musk said. Even still, investors are growing less thrilled with Tesla's growth in the wake of its Q3 release, making the company's forecast increasingly crucial. Since the report, shares of the EV company have decreased by about 14%. Tesla's earnings are now predicted to increase by 79% year over year to $4.05. Earnings for the fiscal year 2023 are predicted to increase by an additional 30% to $5.29 per share. Top-line growth is also anticipated, with sales predicted to increase by 54% this year and an additional 39% this year and an additional 39% to $115.38 billion in the fiscal year 2023. This exceeds by more than 4 times the $4.57 billion in pre-pandemic sales in 2019. Tesla stock, which is currently trading at about $180 per share, has a PE ratio of 43.8x, far higher than the industry average of 12.2x. Despite this, Tesla is still the market leader for EVs and trades at a far lower multiple than both its median of 236.9x and its decade high of 45.336x. Furthermore, Tesla is growing at a faster rate than its competitors, which are well-established automakers like Ford and General Motors, who are at very different stages of their corporate lives. While Tesla is well known for its tremendous volatility, other equities also experience it. An investor advised buying Tesla stock whenever they had the opportunity, even in 2021 when the stock was declining. Michael Bappas managing Director of Vios Advisors at Rockefeller Capital Management told CNBC in June 2021, while Tesla's stock was declining, that the company was a name to watch because of its aspirations in the clean energy and electric car industries, as well as its about 24% market share at the time. Bappa stated on Trading Nation that Tesla is going to continue to be the leader in the industry, especially for the foreseeable future. When you think Tesla, you think innovation. As a result of the company's recent revelation of production and delivery figures that were below Wall Street's expectations, Tesla's stock is currently declining once more. On the other hand, some analysts contend that this is the ideal time to purchase Tesla stock because it is currently cheaper. Indeed, celebrity investor and ardent supporter of Tesla, Cathie Wood, together with her company ARK Invest, purchased Tesla shares twice on October 1st, following the EV company's early October revelation of delivery and production figures, and then again following the company's Q3 earnings call. Furthermore, a few days ago, Wood's ARK Invest purchased Tesla shares in many funds. In terms of value, Tesla may even seem expensive to some, but the business has consistently shown strong revenue and earnings growth over a number of quarters. Furthermore, the company's growth trajectory is still very much intact, according to yearly earnings predictions. Experts think Tesla has a bright future ahead of it. Purchasing a Tesla today may make sense for investors who plan to hold onto their investment for years or perhaps decades. Ultimately, the majority of analysts think that long-term investors are a better fit for Tesla stock than short-term ones. Nevertheless, optimistic investors aspire for completely driverless cars in the long run. Even while dozens of businesses are, in one way or another, pursuing that goal, Tesla's lead is hard to overcome. For years, Tesla has been developing its use of cameras, radar, and GPS to the point where its cars are essentially self-driving. Tesla has also notably invested billions of dollars in the construction of its 2 new manufacturing sites in Texas and Germany, in addition to modernizing its Shanghai facility. The goal of this action is to increase overall production for the organization. At full capacity, the China facility can currently produce 1.1 million vehicles yearly. With a monthly record of 83,135 units in September, it got closer to that run rate. Additionally, the business has stated that there is a greater demand than it can meet for its energy sector, which includes solar rooftops and battery storage. In the third quarter, sales from that division accounted for 5% of overall revenue. Despite challenges with its supply chain and logistics, Tesla is clearly doing well. Due to shipping delays, the corporation built 22,000 more cars in the third quarter than it was able to deliver. Clients will assume responsibility of those automobiles during the last quarter. The company anticipates that output will still rise at a rate of 50% annually, even though that problem might prevent delivery from meeting its 50% growth objective in 2022. According to experts, investors shouldn't rely on any stock to provide a specific return in a matter of months or years. The present supply chain concerns are just one of several variables. Despite being most recognized for being a divisive leader, Elon Musk has also made bold forecasts. Deliveries of the Tesla semi-truck, which was initially revealed over 5 years ago, are scheduled to start next month. As of right now, it seems like Tesla is doing well, especially when compared to the other automakers. The auto dealer marketing and operating software business Cox Automotive and others have released a research predicting a 9% decline in U.S. auto sales this year. Most predict that global trends will be at least as awful as they already are. Tesla's impressive financial results in a difficult climate demonstrate the company's momentum and the significant market demand for completely electric cars. That being said, while the stock is still declining, it could be a good idea to give it some thought. Despite initially appearing expensive, investors may find Tesla's value more appealing when taking into account the company's robust momentum and the bullish view of the management. Tesla continues to keep its third-place ranking in Zacks, with its home automotive industry currently ranking in the top 27% of more than 250 Zacks industries. Tesla is currently trading at a considerably better valuation than it has in the past, even though there might be better purchasing opportunities in the near future. Furthermore, the market for electric cars is still very tiny in the auto industry, despite the industry's enormous growth potential. Furthermore, there is still room for growth in Tesla stock, and the company's earnings estimate revisions have increased from the previous quarter. The average Zacks price objective for the company suggests a 66% upside from the current levels, so patient investors may be rewarded for keeping the stock. According to experts, Tesla is a high-risk, high-reward investment. Don't forget to subscribe to this channel immediately.